Hello, Mark Sturdy here with highlights of this week's 7 days ahead technical analysis. Let's go straight to the summary, and you'll see that we are bullish of the dollar against currencies, sterling, euro, and yen, emphatically. And also at the same time, you'll see that we are no longer bullish of sterling against the euro. That's because there hasn't been a breakout that we anticipated last week. Let's quickly go, for example, to the dollar euro and see what's happening there. The market's been repulsed by the resistances around 120, and in the medium term, it has been in the grip of a pattern driving the market down. The pattern has now lost its influence since we've achieved the minimum target required of the pattern. It doesn't mean to say the trend will be reversed. The trend is well set, and as we see here in the short-term chart, the attempt to rally back against the trend failed. And so we are in the midst of a bull dollar trend, even though this pattern has lost some of its impetus. Sterling euro is interesting because we were excited last week, no question about it. We thought that there was a possibility of the market breaking up above this trading range, long established since 2016. It may yet, but it doesn't look very good. The price actions has looked above it and dropped back within. And so we are standing back for choice. In fact, we would be bearish of sterling now. We've failed to get out of the top because this is now deemed to be even more good resistance. But we are not taking a stance as a whole in terms of short, medium, and long-term trends all being in congruency. There's certainly short-term failure, which raises a question mark, so we're standing back. As regards stocks, we go back to the summary, we are less bearish than we were. In fact, in no case are we outright bearish of stocks, and that's because even though there might be patterns in the making or potential bear patterns that could send the market on down brutally, none of these have come to fruition. And when the markets have pulled back, they've come back to support and are sitting on support. And indeed, in the case of the Nikkei 225, we are back at the breakout level of a major bull pattern. So let's quickly go to the S&P 500 to explain what I'm talking about. There is a potential, massive potential, medium-term head and shoulders top here, but the market is resolutely failing to complete the pattern by dropping down beneath 4,200. And while it doesn't do that, we cannot be bearish, so we're standing back from that. The Euro Stoxx 50 has pulled back dramatically, we know that, but it is yet to close beneath these long-term horizontal supports, these are the monthly, so it has to close below 3703 on the month, and we have 2 weeks away from the end of the month, and has bounced back quite nicely. And in the medium term, we can see this is the specific March contract. It has dropped down to this support and bounced off it. So we are in fact in a medium-term trading range, and a question mark lies over any possible breakdown over the month. So for the time being, we're not bearish. Look again at the Nikkei 225. This is an overall bull pattern, and what has happened really is the market completed the bull pattern and has pulled back to support. And this is very natural and powerful and important support. It was driven by this double top, no question about it. And in theory, the double top might even push it a bit further. But we haven't even penetrated this and closed beneath it on the week yet. So we've got good support here, good support here. That's an overall bullish picture, contrary to other possible intuitive thoughts about the markets. The bonds are unambiguously going for higher yields across the board now, whereas we have been sometimes pausing, sometimes hesitating, sometimes questioning. That is now emphatically back in play. Let's look what's happened here. The market, we know the long-term chart, as the yields have broken up through this massive resistance, 132, 138, and have now broken up again through the prior high of 177. Let's go to the medium-term chart, and we have here a perfect example of a good continuation triangle. The market broke up, pulled back, and has now bounced exactly where it needs to bounce if the bull trend for yields is to continue, and it looks well set. In price terms, what's happened is the market rallied back to good resistance from prior lows, tried twice to get through, failed twice, and is now beneath the prior low and ready for the next leg of this bear trend in prices, bull trend in yields. Commodities. We have been bullish of commodities. Now we pull back from that. The best explanation really of being of the market, the market got to wildly overbought conditions in both markets, and now they are drifting, and so there's a question mark over to what they're going to do next. Most useful possible. This is a possible, and it's not a absolutely cast iron bull head and shoulders reversal. It's a possible head and shoulders reversal that shows there's no support really down till the low 80s in terms of price. You could just see in the weekly chart the support in the 78 here. That's the May. So there's a good deal of drift that can go on in these markets before they find support. Gold. We were excited about gold, and we remain excited in the very long term, but short term we're not. Here's the dithering around the prior high of 1915. This is the bottom we think has completed. So it's an overall bullish long-term, medium-term construction, but the market got up to the previous high and is drifting. There's no support to 1919, so we don't anticipate buying unless the market can get to 1919. So there's still some good drift that could come down, certainly 1922, where it is in fact this morning. So some brave bulls might start buying at 1922, possibly going on to buying down to the 1882 possible level. But so we are lower this morning. So in fact, this morning, as opposed to when this was written, might suggest that brave bulls would start buying. It is a break of this trend line. It's not a terribly important trend line. These are the important factors. This is the double bottom, and support should come in at this level. Thanks very much.